Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 8th of June, 2023. So, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear here from that little corner in there, and we can continue after that. So, now then, also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. But yeah, guys, without further ado, let's jump into the charts. So the first one I want to pick up here is Nikkei 225. So yesterday we had a nice little decline. Today we're seeing a bit of a rebound here from this upside line. This is what I talked about yesterday. Of course, the Japanese data is helping the index to jump because yesterday, as I said, the weakness kicked in and we had that retracement, which is fine, which is okay. Everything's kind of in line. And today we got the Japanese GDP numbers that came out, and the year-on-year showed fantastic results. So look, the previous one was at plus 0.4. The forecast was for plus 1.6, and it actually came out at plus 2.7. Now that's quite, spectacular and showing good results here on Nikkei. Relatively good, I would say. We are having a bounce. We're not basically declining, So in other words, look, if you want to consider maybe some higher levels on this one, I think I'll do a few adjustments right now. So previously I talked about this territory right here, this area between the 31,458 and 670 levels. I told you about this. This is going to be my target if we do correct lower. Around here we can also test this upside line, which we almost did. I would say this is perfect. Now how we can position ourselves further? Well, first of all, let me mark this high, the highest point of June, current highest point of June, near the 32,733 zone. But in order for me to go a little bit to the upside, I would say back to the upside, I would like to see a push above the inside swing low here of this 6th of June. So if we, which is around the 31,990 level. If we do push back above it, then yes, I will go to the upside. For the downside, I would like to see a drop below the 31,458 zone right here. And if we do get that drop, then yes, further declines are possible. So, long story short, guys, that's the game plan for now. If we, like I said, if we do get that drop below this upside line, then yes, I will get a little bit more excited with the downside. ASX 200. So, again, look, in general today, this session, there's not going to be much to say because, again, a lot of things I'm going to repeat myself because the market is just doing similar stuff. So, I'll just give you a quick update on some of these instruments. There are some new instruments here as well. So, but I'll give you a quick update on what's happening because again, not the most exciting week I would say this is. Mainly because of there's a lack of U.S. data this week. However, something that I cannot say about next week. Next week will be, it should be a little bit more interesting. Now, look, coming back to the ASX 200 here. So we fell below the 7,131. I talked about this. And I said that my next target will be this area between the 7,064, 76 levels. So far, I'm aiming for that. I want to see how this is going to play out here. But for now, yeah, that's my game plan. For the upside, in order to consider some higher levels, I would say maybe a push back somewhere above this 200-day EMA and this 7,177 level. So if we do push back above it, then yes, I'll consider a larger correction here to the upside, and we'll aim for this downside line. China 50, which is the FTSE China 50 index. So far, to be honest, not much excitement here, I would say. So again, I cannot really, without repeating myself, what I've said already this week, there's nothing else to add to this one. So for now, what I'm looking at here is if I get a break of this downside line, then yes, I will get a little bit more excited with some higher levels, and then I could aim for the 50-day EMA initially, or even the 100 or the 200. But look, a break of it is needed. So until I get that, really, I'm just observing the price action, because even with the downside, I need to see a drop somewhere below this 12,237 territory. And then, yes, this may attract a few more sellers into the game and blah, 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 right? The same scenario again. But for now, like I said, I'm just kind of playing the waiting game here and watching this, and I want to see what's going to happen here. Now, India's Nifty 50, guys. So I haven't looked at this one for quite a while, but hey, so far so good. Because why? Because look, I talked about this idea here. I said that if we break above this highlighted zone, which is roughly between the 18,483, 519 levels, if we clear that and then if we stay above it, then yes, I will continue aiming to the upside, where my next target will be this 18,908 territory. Not exactly the level itself, but the area around that level. So I would say, good result. We have managed to reach it, or let's say the area close enough to that. So let's see if we can, what's going to happen here further, if we can get a hold up or not. So if we get a hold up, maybe a bit of a retracement here could be possible. So something in the lines of this. If we start clearing the 18,908 zone, then yes, higher levels could be met, where we could aim for that highest point of December of 2022. If I'm not mistaken, also the highest point of 2022. Look, India came out with no rate hikes, unlike the Bank of Canada, which I'll mention in a bit. India came out with the same 6.5%, so they kept the same their interest rate at 6.5. The market loves that, and that's where we're seeing some more positivity here. So look, I think that there are not much to add here, but I think that it's gonna stay for like this for now, unless their economy starts or we see some higher inflation. Let me just double check something here with India. Okay. Just bear with me one moment, guys. So I can see that I'm just curious on the inflation rate. Okay, the inflation rate seems to be at 4.7. Okay, that's interesting. But okay, so that's interesting basically because the interest rates are at 6.5. But India's inflation has fallen quite significantly, to be honest. And it was what in the beginning of January, it was around 6.5. Now it's 4.7. So quite a quite a decent decline. But of course, we understand that it fluctuates very sharply, rapidly, and it can be a bit of a problem. But anyway, look, coming back to India here. For now, I think that if the inflation continues to drop like that and the interest rates are not going to rise, then maybe we could see Nifty 50 actually pushing further north. So, but again, let's wait and see. For now, that's the game plan. Let's revisit this one at a later stage. Nasdaq. So okay, yesterday, look at this beauty. We found resistance near this territory. I talked about it. I talked about this area between the 14,642 and 14,725. And then yesterday I mentioned that I'm keeping an eye on the 14,725 level in order to go higher. And we came close to that, but then we failed to push further north. And look at this. We sold off heavily and we fell below that 61.8. And this is what I talked about. I said that if we do fall below that 61.8% retracement on the Fibonacci here, then yes, I will consider further declines. Of course, another obstacle to overcome is this 14,250 territory. If that gets cleared, then my next target is this upside support line taken from the low of the 13th of March. The S&P 500, so also declined yesterday. Okay, that's fine. That's not a problem. We still have like some opportunities here, maybe for some upside, but I think that maybe a bit more retracement here could be possible. So I'm keeping a close eye on this 42 territory. I really like that one. If we do clear it, look, then we have a problem with a bunch of upside lines here, which are a little bit on the tentative side, to be honest. Okay, the steeper one here, drawn from the low the 13th of March, is kind of okay, I think, because it's coinciding with the 50-day EMA. So, maybe this could work, actually. So maybe I would have to draw my scenario here like this. Okay, look, if that's the case, yes, there are more downside to come here in the near term. And for now, but to be honest, I don't want to rush into anything like that just because next week we have the Fed, right, in its interest rate decision. This might bounce around here a little bit, and this might kind of move maybe sideways. Don't be surprised if we see something like that going all the way to the June 14 meeting. But right now, I mean, yesterday after Bank of Canada's surprise rate hike, and we can see that the probability here for the Fed's on the FedWatch tool, the probability for the no rate hike has declined, and this is what I was talking about, guys. I said to you that don't be surprised if, let's say, we see this to even out, to even out, but I'm trying to try becoming more even. There we go. So like equally split, closer to the meeting. So again, will that be the case? Let's wait and see. But yes, certainly yesterday Canada did surprise. However, look, I talked about this yesterday, and we saw that the RBA did give us a surprise, and maybe Canada also wanted to do this little thing, and so yeah, also gave us a little surprise. So the the interest rate rose by 25 basis points to 4.75. Now, the last rate hike, I think it was back in May. No, sorry, let me just double check. April. Just bear with me one moment. I think that was in March, something like that. Is that the case? Yeah. Okay. with me one moment, guys. Interest rate decision. There we go. Yeah, the last time we saw an increase was back in January, actually. Yeah, so in January, we saw a rate hike this year, yes, by 25 basis points, and then we kind of had a gap, and now we increased. Canada increased again by 25 basis points. So, bear with me. Okay, so what can we expect next? Basically, for now, looking at the picture here on the S&P 500, like I said, I'm kind of considering maybe this one maybe to drift a little bit lower here, but mainly to stay around somewhere this territory, maybe even above this 42 zone. Bear with me one moment. Let me clear up my throat, honestly. Okay, guys, so I think my my throat today is not feeling the best. So apologies for that. Apologies for the pauses, the health pauses. But anyway, jumping. Oh, excuse me. Jumping into DAX. Okay. Jumping into DAX, guys. Again, the same scenario is valid because, look, I've talked about this range, and I've mentioned this before, and I told you that as long as it remains inside here, I'm not really touching it because it's, in a way, it's a bit of a tricky moment here. I mean, it could move sideways for now, and in general, and also what I mentioned that maybe we have ourselves something of a complex head and shoulders pattern here with the level. Oh, excuse me. Okay, guys, today's not my day. First, the voice is not really working well, and now the hiccups. Oh well. So, look, with the German index DAX, here, like I said, as long as it remains inside this pattern, inside this range, I'm not really touching it because, again, maybe it's a complex head and shoulders pattern with the current formation of the right shoulder. Again, we don't know yet, so I would say for now, look, maybe the neckline here could be also something around this. Could be the case. Look, I'm not really rushing into anything yet. Maybe this is the neckline, maybe not. Maybe the 15,700 or 800, 700 territory is the neckline. We still have to establish that. So for now, I would say let's continue observing the price action here, and if we do see a drop below that 50-day EMA and this 15,800 territory as well, then yep, that's where more sellers could join in. So until then, guys, even the upside scenario is not off the table because, again, a break above this 16,063 territory, and not only a break, but also the body of the daily candle. If the body of the daily candle stays above it, then yes, potentially this could attract more buyers into the game. FTSE 100, very quickly. So far, I would say we're still trading above that 50% retracement on the Fibonacci here. Look, I'm still sticking to it. So far, it's kind of acting as a good area of support. If we do continue to trade above it, then yes, I will consider maybe a larger correction here to the upside, where we could end up testing this downside line taken from the high of the 21st of April. Now, If the index falls below the 38.2% retracement here on the Fibonacci, at the same time we could see a fall below the 200-day EMA, and potentially this could open the door here towards those lower levels like the 23.6 or even below that. Let's jump into the dollar index. So yes, the dollar yesterday was a bit of on a roller coaster ride, and we saw a test of the 200-day EMA. And just bear with me one moment. Honestly, my voice here today is a mess. Okay, guys, apologies for the pauses today. I mean, like, honestly, I'm trying to get my voice back on track. Hopefully, a bit of coughing and clearing the throat helped. But anyway, look, coming back to the dollar index here, I would say in order for me to go higher, still the same game plan is valid. I need to see a break of this downside line and a push up of the 104.61 territory for the downside. A drop below the 103.40 territory is required. All this area right here is something of a neutral one for me. Look, in general, kind of I'm leaning a little bit more towards the upside, but I do understand that, hey, anything can happen, and we could see, a decline here as well. But at the moment, the price structure seems like I couldn't say higher highs, but higher lows for sure. So maybe we'll go for that higher high, but I would say for that, I need to see a break of this 104.61 territory. Let's jump into gold. Yesterday, that was a spectacular move here. It dropped lower, and we broke the upside line. And look, we're still below this upside line, and we're below the 100-day EMA. So in other words, I'm kind of leaning a little bit more towards the downside right now. Maybe we could revisit this territory, the area between the 1936 and 1939 levels. If those get cleared, well, this could open the door towards the 200-day EMA, guys. So at this point, I would say be careful, be cautious, and if you're a bull, then I would need to see at least a push back above this upside line, at least. Because at this point, I'm kind of leaning a little bit more towards the downside. Silver. With silver, to be honest, I'm flat, and I'm not really doing much here because, again, it continues to oscillate around my highlighted zone here between the 23.5257 levels and around that 100-day EMA. So if you're looking for some higher levels, then certainly a push above the 100-day EMA is needed. And if we do fall below this highlighted zone, then yes, this may open the door towards that 200-day EMA. WTI oil, look, it found some support around here, around these levels, a bunch of these levels that I've drawn here recently, but all of them kind of did their part, and all of them did act as good area of support. So for example, this one, the 70 zone, did act as a good area of support. We rebounded from it and then pushed back up. We tested the 50-day EMA. At one point, the 71 territory was also a very good area of support. So look, if you want to see some higher levels, I think at this point, I will just stick to. Actually, I'm going to get rid of this, and I'm going to stick to the EMAs. Look, if we do push above the 50-day EMA, great. I will start aiming for the 100-day EMA, and then so on and so on. But as long as we stay below it, then there's still hope that we could see a decline. And I would say if we do fall below the 71 zone right here, I will aim to the downside. Jumping into cocoa, basically, look, this is something that I don't look at very often, but I do like these occasional kind of commodities or exotic ones which we have here on our platform. And look, at this point right now, look in our daily chart, you can see that there is some positivity building up, I would say. First of all, let me draw some trend lines here. So this one, upside support line taken from the low of the 15th of March. So, and at the same time, we have ourselves a barrier, the at 3,100, approximately around there. So if we do break and stay above it, then yes, I will go higher, because a forthcoming higher high will be confirmed, guys. So as looking at my chart here, it seems like it's the all-time high. We're creating now right now a possibility for a new all-time high. So yep, let's see if we can go further north, guys. For the downside, a drop below the 3,029 territory might be a good deal here for the sellers, because at the same time we would fall below the this upside support line. Of course, then we would have to aim for another upside support line right here, which is another one taken from the low of the 26th of October of last year. And if we do, yes, if we do break the steeper one, then maybe we could start shifting our attention towards the other one, the more the long-term one, or should I say maybe the more medium-term one. Now, Bitcoin Cash, guys. Yeah, again, the roller coaster continues because of the whole Binance and CoinDesk issue. Yes, as you know, Coinbase. Sorry, not CoinDesk, Coinbase. As you know, the SEC sued Coinbase for like breaking the market rules. Okay, how that will end, I don't know. But as I said yesterday, it seems like, it seems that the SEC could be losing the game against against Ripple, and it's like, let's grab another prey, another victim. So I don't know if it's going to be proven or not, but at this point we can just observe the show. And of course, yes, I wouldn't stick to the cryptos right now, just because, again, but that's only my opinion. Maybe I'm missing out on something. Maybe there could be a nice boost here, like a last boost before fall, again, something like that. So, but it's a tricky one. So that's the only thing I can do right now, is go from the technical perspective. So at the moment, you can see that we fell back below the 112.89 zone right here. And yes, if we continue to trade below it, I'll aim again for the 107.31 level, and then I'll go from there. Dogecoin also fell back below this highlighted zone. I talked about it, and yes, for now, my next target is the 0.0626 territory, and then we'll go from there. Okay, let's jump into a few Forex pairs. Look, AUDNZD. I've talked about this one yesterday. I was kind of trying to find, like, Fibonacci, from where to draw the Fibonacci, but at this point, I think it's like just unstoppable. Look at this move from 1.0560 to all the way to 1.10. I mean, that's a spectacular move in like only in a matter of a couple of weeks or here or something like that. Yesterday, I was kind of hoping to see maybe a hold up near this 1.1013, but it seems like it's kind of acting as a possible area of support. And if we continue to trade above it, then yes, my next target is the 1.1088 zone, marked by the highest point of February, or in other words, the current highest point of this year. If we do, like I said, if we do reach this area, that could be quite an interesting one, to be honest, and then we could go from there. Jumping into AUDJPY, guys, the problem here is that, well, not the problem, but we basically managed to reach the upper side of the rising channel. I talked about it, and for now, what I'm going to do is I'm going to wait and see if we can stay below this If we can stay below this upper side of the rising channel, then yes, I will consider maybe a bit of a retracement here to the downside. And also keep your eyes on the indices, because if those start to decline, then the yen buying would resume, and yes, we could see this pair moving nicely to the downside. In order to go higher, I would like to see a break of this upper side of the rising channel, and then yes, we could go from there. Look, we do have this barrier right here, which currently is acting as a good area of support, and this 93.05 territory, that's the highest point of February of this year. We moved above that, we cleared that territory, so we're still staying above it. If we do somehow drop back below it, then yes, a correction might be possible. USDJPY, yesterday, beautiful rebound from this upside line. I talked about this idea. I said, hey, maybe this is a neckline of a possible head and shoulders pattern, but we did rebound, and I said that, look, don't really stick to that idea of a head and shoulders, because if we do see that break of the neckline, great, we'll go lower. But it could also rebound. It could push back up, and if we do push above the 140.45 level right here, then yes, more buyers could join in. USDCAD, beautiful test of the area. I talked about this, the lower side of this potential kind of wedge pattern, to be honest, or triangle pattern, I would say even. We tested that, we rebounded from it, and maybe we could see another revisit. But look, if we stay above this, I would say maybe a retracement back up here could be possible, back to the 200-day EMA. If that gets cleared, then certainly, yes, higher levels could be met, but let's get to that point first. If we do clear the lower side of this wedge pattern here, then yes, we'll start considering some lower levels. And let me just grab this. Yep, there we go. Why is it like this? There we go. So if we do drop, yes, below this area, I will consider further declines. US dollar against the Mexican peso, guys. Okay, look, fantastic move to the downside in general. And let me just update something around here. Just noticed. Okay, there we go. So like I said, we had a nice move here, and I talked about this, and I said that if we do fall below this territory, below that 17.53 territory, somewhere around here, then yes, I'll go lower, aim for the 1742 zone, and if that gets cleared, look, what I'm going to do right now is I'm going to aim for territories near these nice, beautiful numbers. So the 1720 could be my next target, or the 1725. I would say first, let's aim for the 1725, and then the 1720. Certainly, of course, the psychological 17 level is kind of, jumping into our minds right now, but I would say let's go slowly. Let's not rush into anything, and for now, I'm aiming for that 1725 territory, and then it will go from there. In terms of the upside, I would say I would like to see maybe a push somewhere back above this territory, something around here, maybe the 1753 zone. Again, if we do clear that, then maybe more buyers could join in, but I think that maybe even this little hurdle could be of an interest, 1760. So if we do jump above that one as well, then yeah, potentially this could open the door to some higher levels. GBP Aussie is an interesting one here as well, because look, we rebounded from this hurdle. I talked about it yesterday, and I said that if we do want to go further south, then drop below the 1.8588 zone here is needed. This will confirm a forthcoming lower low and could open a door towards that 100-day EMA. So for me, for now, this scenario is still valid. And if we do continue to trade below that below that 50-day EMA, then yes, certainly I will stick to the downside. For the upside, I would need to see somewhere push back above the 1.8775 territory right here. Maybe actually I would say not even this level, maybe somewhere around here, the 1.8823, just to be a little bit more on the safe side. It acted as a good area of resistance and support recently, so why not? Why not to consider this as a good possible breakout? Some of you might say, but hey, what about the 50-day EMA? Well, look, you can, just the only thing is that it's still a little bit tricky. You can, like, let's say, maybe stick to that 50-day EMA, but don't forget about the possibility of seeing some oscillation around that. So, for example, we could jump above the 50, and then, it could reverse back down, move back below the 50, and then, reverse back up. So we have seen this happening several times, so just be a little bit careful with that. That's why at this point I'm not really recommending the 50-day EMA. EURCHF, beautiful exit. I mean, working. It is working. The falling wedge pattern idea, according to all the TA rules, such patterns tend to break to the upside, and there we go. We're getting that breakout. For now, I'm going to stick to the upside. I'm going to aim for this 50-day EMA or maybe even the 100-day EMA. Let's wait and see. But at this point, as long as we stay above this upper side of the this falling wedge, then yes, I will go. I will continue aiming to the upside. EURCAD. So yesterday's interest rate decision from Bank of Canada did help out the Canadian dollar a little bit. We saw the this pair pushing further south. We saw also USDCAD, of course, pushing further south. But look, at this point, we need to go slowly, I think, because we're not. Yes, we did see that nice drop, but can it go all the way here towards this 1.4239 zone, somewhere around here? Well, let's wait and see. This is what I'm going to be aiming for now. If we do get a hold up rebound from here, then yes, great. Maybe I'll aim for this upside line again. Oh, sorry, downside line again. But look, if you're really looking for something a little bit more bullish, then a break of this downside line and a push up of the 200-day EMA might do the trick for some buyers. Now, if we do fall below this hurdle, this highlighted territory, now that's where it could become very, very interesting. And further declines, guys, could be possible. And this is where, look, what I can do here is, for example, try to draw a Fibonacci from this territory to this territory. So you can see that basically this key support zone, the highlighted area, is near my 38.2% retracement on the Fibonacci, which is drawn from the lowest point of August of 2022 to the highest point of this year, which was in April 2020. Well, in April this year. So if we do fall below the 38.2, guys, below this highlighted zone right here, then yes, my next target is the 50% retracement on this Fibonacci, which is not far from the psychological 1.40 zone. Talk about good, beautiful levels. EURNZD, so beautiful rebound here, and one of the viewers yesterday was commenting about our EURNZD, and this is what I said. Look, maybe it could do that, but I was looking for a drop somewhere below this area in order to go further south. We did get a little false breakout, but then we quickly reversed back up and we climbed back above the 23.6. So look, for now, I will stick to my game plan and I will aim higher if we do push above this 1.7737 territory. Look, the fact that we're still trading above the 23.6, that's great. That's really, really helping. If we do push above the yesterday's high, then that's great. So then we could go a little bit higher. Alumalai 1, I can see you there in the chat room. Gold, look, I already covered gold. This is the list that I go through normally. So if you want to watch the replay of this video, then yes, you can. And like I said, I've already covered gold, so I'm kind of at the end already. So just watch the replay, but or join me a little bit earlier, because again, like, this is the normally what I go through is first indices, then commodities, then cryptos, and then currencies. So you can, like I said, you can roughly jump around that, well, or a little bit earlier during the video, and then you can pick up on gold. We can pick up on gold, but I already covered that, so I'll just continue with the analysis. So yeah, that's, long story short, that's the game plan here on EURNZD. If we do push above this 1.7737 territory, then yes, I will consider a move a little bit to the upside here, towards this area, towards this barrier, around the 1.7840, 50, something like that. And finally, EURUSD. So this one's a little bit of a mess, because again, we continue to oscillate around the 200-day EMA, but on the positive side, we broke the steep downside line. Look, I said to you that it's a bit on the tentative side, but the fact that yes, we're still trading above the 200-day EMA, this of course increases the chances for this pair to move towards the 1.0760 territory. If we get a clearance of that one, then yes, more buyers could join it. For the downside, we would need to see somewhere a drop below the 1.0662, 72 areas, approximately around here. And if we do get that clearance, then yes, more sellers could join in. But of course, initially we will already start monitoring the 200-day EMA, and if that gets we drop again below it, then yes, we will start considering some lower levels. Okay, guys, that's it for this session. So first of all, apologies for my health. Yes, like I said, had a bit of a throat issue in the beginning of the video. So I hope you found this useful. It's not the most exciting session today, because again, I just repeated a few scenarios that I already mentioned. But look, let's see how the day is going to go today. We have the initial jobless claims coming out together with the continuous ones from the US, so keep your eyes on that. But it could also be a relatively quiet day, so just be careful and cautious about this. If you're looking for some volatility, the volatility right now is on the lower side, so just kind of keep that in mind. Yeah, looking forward towards tomorrow's session, guys. Join me tomorrow, 6 o'clock GMT time. But for now, have a beautiful trading day. Stay safe, have your stop losses in place, and only risk what you can afford to lose. Thank you very much, and I'll see you tomorrow. Bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.